Hi, good afternoon, everyone. Hopefully you had a good breakfast. Anyone here having their portfolio green color or not? Portfolio, if you're invested in the stocks, your portfolio is in green right now. Anyone? Oh, green, fantastic. What about the rest? Red color? Red,
I think red, they don't want to put up.
Red, they don't want to put out a hand, all right? Most
No,
Malaysians, can I just get your support? Can you all raise your right hand, please? Right hand. Raise your right hand. Okay, what about your left hand? Okay, I just wanted to make sure both your hands are working. Just in case, when I ask you guys, it can work, all right? So, before we start the session, I know there may be some questions. So if you have any questions, can you take out your phone? We're going to answer Q&A through Slido. You can actually take a screenshot of this, scan it into your phone. While we are sharing this session later, promptly time out all your questions so that at the end of the session, we'll access those questions and we'll try to answer them to the best of our ability. Right? My role here is to tease out as much as possible from both the panelists, very esteemed panelists. And yeah, market outlook. Sorry, we just have to say upfront, we're not going to give you stock tips. Most of the time you come to these sessions, you're expecting some stock ideas. Hopefully you can read in between the lines. That's what I will say, right? And last but not least, as a disclaimer, whatever we say here does not constitute financial advice, neither is it a buy or sell recommendation. It is purely for educational purposes only. All right? So far, so good? Okay? So, I'll start off this first question to the panelists with regards to how the global markets are today, right? There are tons of headwinds going into second half of 2023. And across most industries, from retail to industrial, it's been quite a slump, There's not much demand from consumer side. There's not much demand even from the business-to-business industrial side. What will be your critical monitoring points when you look into second half of 2023? Maybe Paul, we'll start with you first.
Hello. Hi. You guys can listen, right?
Yeah.
Yeah. So basically, when we talk about the market, right, we try to separate the market and the economy. So I think early on there were two speakers. Pretty much they have spoken about how the market reacts and how the economy reacts, how the different timing and differences. So if you think things are bad now and you try not to invest, I think the previous speakers have already shared that it's probably not a good idea not to invest when times are bad. So basically sharing the same views is that last year, I think it's very important that we know where we are now. Previous speaker has talked about it as well. So last year we came in very high at the beginning of last year. So market was pretty high and that was easing cycle, monetary easing cycle, which means that central banks all over the world, they've been printing money and free money all over the place. But then they have started tightening and that's where the market started reacting negatively. But things are very different now. Central banks don't tighten forever. There's always a cycle. And the good news is that now that we are here and that actually monetary tightening cycle is coming to a tail end. So you have seen many charts that the biggest central banks in the world, US, have raised about 500 basis points from about close to 0% to over 5% now. So both of the tightening have been it's already passed, and going forward, if any, there's just going to be pretty minimal tightening. But of course, depending on inflation data. That's the second part, right? Inflation data is more on economy, and so that's one thing. So how we should feel about the market is that we should feel very bullish about the market because we are now at the tail end of tightening. So it's very important that we shift our mindset. So your portfolios might be red because you might have hold on to your whatever investments throughout the last 1 year. But that is the past, right? As a human, we need to be more forward-looking. So that's positive. of course, there's positive, there's negative, right? Negative is recession. So everyone talks about recession, and the current view now, as previous speakers has talked about the expectation of recession, which is a mild one. So the current market consensus or general view is that a mild recession. So that's the reason why you see market is pretty bullish globally. Because a mild recession, which means the economy or the market, investors or businesses can take it. Because it's a mild recession. So the only problem is if the recession is going to be a severe recession. So as you know, in the market economy, as more data comes in, then the market reassess the situation. But at this moment, it's a mild recession. So me telling you, I'm bullish, we are bullish on the market, equities, fixed income now, doesn't mean that I can't change my view in the next 1, 2, 3, 4, or 5 months, right? Yeah. So that's the reason why there are so many trainers, or we have unit trust fund managers like me myself, managing funds for clients. We have fund of funds, FSM1 booth there. So it's very tough for individual retail investors to have very good sense of the market, because it's not your job. It's our job to be tracking the market on a day-to-day basis. So, and before we sleep, we read news. When we get up, the first thing we do is not brush our teeth. We look at news, because US market will be closing. Even before US market close, we will be reading news already. So it's very tough to be a retail investor, especially for this environment, especially for the next 2, 3, 4, 5, and 10 years. Things is not going to be as same as in the past 20 years, as easy as that. It's no longer as that. Yeah.
Jin Yong, your thoughts?
It just reminded me I forgot to brush my teeth this morning.
Because you were looking at the market, is it?
Yeah, sort of. So maybe I just add on to that. I think you covered a lot of the areas already. Good news, bad news. I think moving forward, bad news can be good news. And if you're wondering what I'm talking about, I think we all know that the Fed, the central bank of the US, right, whenever they do any actions, say anything, it moves the market. And right now, we know that the last couple of years, interest rates has been going up. That's why you see it's been challenging on the valuation fronts, right? So when there's bad news, when I say bad news, like, oh, recession could be coming, the economy could be stalling, right? There is always that expectations that the central bank will stop the tightening, hiking rates. They might even cut. We don't know yet, right? They might even cut. So that could be positive for all the different asset classes, including equities in general. So what I'm trying to highlight here is that there's a lot of noise in the market. And I think if you were here earlier when our Minister of Economy spoke, he mentioned about having a long-term view. So I think that's important, having a long-term view. It could be challenging for the next second half, but you should not, because of all this negative outlook, stay out entirely, right? Stay informed, come to events like this, and, well, take the plunge, but not the whole body, dip your toes first.
Okay, thanks. So for those of you who just came in, I just want to recap what they both said. The question I asked is, in the first half, markets are bad. What will be their views going forward? What will they monitor? Paul actually said a lot about quantitative tightening and see where the cap is going to go. And I think Jin Yong reiterated that. And also both of them reiterated the fact we should have a longer term view. I'm in agreement with that because a lot of company valuations in terms of PE have actually come down quite a bit. And I think this is a time when if you are well informed about certain companies and certain industries, this is actually a very good valuation entry point, okay? So my next question is this. We're seeing very high inflationary measures across the board, especially energy prices in Europe. If you have any friends in the UK or in London, you can ask them how much did they pay for their gas bill, their electricity bill. Now, one of the things that actually impacted this was the Russian-Ukraine war. But at the same time, there are also other factors in play which I will tease out from the panelists. So looking at the scenarios that you guys foresee, in the next 2 to 3 years, will this high inflationary scenarios still continue to play out or not? Maybe Jin Yong, we start with you first.
Okay, I think we have been kind of spoiled for the last 10 odd years in a low interest rate environment, right? It wasn't supposed to be low interest rate and low inflation rate for so long. It's kind of unnatural, and a lot of it has to do with the central bank's unconventional monetary policy. Now, going back to your topic about high energy costs, so yes, one of the reasons is, of course, the Russia-Ukraine war, and that has a huge impact on energy costs. But I think the other reason for the higher energy costs is, dare I say, in a way, kind of self-inflicted by the European countries. Why? This was the other thing that our minister talked about earlier, RE, or renewable energy. So everyone's going into solar, clean energy, right? And I think that has been too aggressive in the European space. So much so that when the war with Ukraine started, suddenly they didn't have enough supply of natural gas. Natural gas is very important in Europe for their heating. Over here, we don't need heating, right? We need cooling. I think we all need cooling.
We all need cooling, especially
Yes.
in this room here right now.
Right.
I don't know about
Yes,
you guys,
thumbs up,
but
yes,
we're actually sweating because we have to wear a coat. How I wish I could take off my coat, but okay. But anyway, go ahead, sorry.
You can if you want.
Yeah, we just leave the tie, right?
So because of the shift to all these renewable energies, which are not as reliable and dependable as the fossil fuels, the supposedly very dirty fuels. Actually, natural gas is actually quite clean, right? So because they shifted so aggressively, when the war started, they didn't have enough capacity. And going back to the original question, I think the inflation will stay elevated because all these pressures will still be there because they are going through a structural change now.
Yeah, that's right. Paul?
I think I got a slide to show the inflation.
Is it? Some more? Is it? Let me see. Yeah, not this one, right?
This one. Yep. So if you look at this chart here, right? I'll just stand up. So earlier on, I mentioned that this is the S&P 500 index, the performance. So it's very important that we know where inflation is. So inflation, basically, from now that we look back, right? Inflation definitely have peaked last year. So when inflation peak is when the market start rallying. You can see this is the peak of inflation CPI US. And this is actually the bottom of the S&P 500 index. And the chart on your left is back in 1970s, there's a hyperinflationary period. So same thing, the peak of inflation, it marks the bottom for the index. Because investors basically are forward-looking. They know inflation is coming down, which would be good for the market, good for the economy because of lower prices, whatever it is. So that's why the market start rallying, right? So what I can tell you now is that for the probably next couple of months, definitely the trend is inflation coming down. I think there's another slide. Yeah, so you can see US core PCE inflation, which is what the US central banks monitors, the inflation numbers. Then you have the US CPI data. Then you have the rent index, the average rent in the US, how is it trending? And the US hourly wages. So everything has been trending downwards. The peak was actually last year. So, so answering the question, for the next couple of months, and now the trend is lower inflation. But of course, if you ask about 1 year and 2 years, right, that is actually anyone's guess. And if I were to take a view, I think inflation should be higher, but that is a longer time horizon. So unfortunately, in investing, it's very complex. So inflation is just one factor. There will be a lot of other factors. So what I can share now is that I'm positive on the market because the current trend is inflation is moving down, at least for the next couple of months at least.
Yeah, just to add on to these two panelists, if you look at projections of salary increment, actually Malaysia still lags very much behind. What surprised me the most when I was doing research on this was actually Australia having the highest minimum wage in the world. If you can see those in darker green color, those are where higher minimum wages are. Australia is about 2,200 US dollars versus the US is about 1,005. Anyone wants to take a guess what is the Malaysian US dollar equivalent minimum wage? I know it's a very small number to see, but anyone wants to take a guess? 200, 300? It's 1,002, 1,005, so it's roughly about 200 to 300 US dollars. So we still lag very much behind a lot of these countries. So to reiterate the point of these two panelists, what we are seeing is that inflationary factors such as wages, logistics costs, energy costs, all coming down actually. If you look at freight rates today, commodity costs have come down. Freight rates, global container rates have also come down. During COVID, when there was a lot of logistic cost hikes, this also contributed very heavily to inflation. But what we are seeing today is that all these factors like wages, energy costs, commodities, which is raw materials for a lot of produced goods, as well as the global freight rates, all have come down from the peak actually. So technically, apart from fiscal and monetary policies of the central government, these are factors that you should be looking at to determine inflation as well. Okay? So, next question. While we're seeing falling prices from logistics, commodities, labor costs, we still see some margin compression across most companies. Why do you believe that is so, actually? Anyone wants to take, yeah.
I think that is quite memorable to me because when I was talking to a few clients a couple of months ago, I was showing my slides, like those slides that you guys saw just now, declining commodity prices, logistic costs, shipping rates, and the fuel, whatever raw material prices that you're seeing, industrial metals, everything. And then my client was like saying, he was telling his right-hand man, can you please call the supplier and tell him that the rate has dropped? Because that is not reflected in the invoice. So basically, even, because these are all leading indicators.
Leading indicators.
That people like us, we track on a daily basis. That even businessmen, they don't realize. So only when they meet financial guys like us, then they will be like, oh, okay, I should talk to my suppliers. So if you guys are businessmen here, you should start talking to your suppliers and keep pushing them on lowering the invoice. Yeah. So, and then another client was talking, they are in the chip industry. So they also say that, oh, inflation is not coming down, man. Things are still very expensive, still going. Actually, the prices are still going up. So, but throughout, after all these meetings, my clients kind of like started to talk to their suppliers. So you guys should do it. I think the other thing is that, the key point is that there's a lag effect.
Yes.
There's a lag effect on, these are key prices. So your oil prices definitely will reflect first because your oil prices is you pay, right? You pay now, right? But whatever your supplier charge you is, there's inventory cycles. Their inventory might be, they might have built the inventory at a high prices, high cost. So they want to get rid of the high prices, high price inventories. So they push those old inventories to you, and that's why you get the higher prices. So basically, it takes time. But rest assured, I am quite confident that prices it shouldn't be going up too drastically, and if anything, it should start coming down. Yeah.
Jin Yong?
Adding on to the fact that you mentioned leading indicators, you open a newspaper, there is economic data and all that. So there's actually 3 types of data. We saw that the leading indicator, that means what happens first before it impacts the economy. We always read about GDP numbers. So that one is coincident, it's happening now. So if you say, oh, GDP grow, the economy grow, that's happening now. Another type of indicator is what we call the lagging indicator. One very good example that I think most of us will be familiar with is the unemployment numbers, right? So we don't see, if we see an improvement in economy, we may not necessarily see improvement in unemployment immediately. Reason for that is very simple, right? When the economy is picking up, the bosses don't want to immediately hire first. They'll just make the employees work harder, right? The same goes on the other side. When the economy starts to go down, the employers are humans. They don't just fire people left and right. They still have some heart. It takes time to let go people. So unemployment numbers, if you've seen them, keep in mind that they are a lagging indicator. So they take time to be reflected on what has already happened in the past. Yeah.
So just to reiterate, 3 indicators are leading, coincidental, and lagging. The chart above shows you one kind of leading indicator, which is the Purchasing Managers Index. Now, what does this mean? For those of you who are a little bit unfamiliar with this is actually a survey done by people like S&P to determine how much your purchasing managers of industries are buying inventory, raw materials. This is actually one kind of leading indicator that these guys actually watch. All right? So, next question. Okay, we're going to move into, you have something to add?
Actually, the stock market is also a leading indicator.
Oh yeah, stock market is a leading indicator. Actually, exuberance and also fear will be priced in very fast, right? Especially if those guys who are traders, the moment a war happens, I think they're very busy, right? Not that we want war, but I think a lot of traders are, they try to trade on this volatility. So we're going to move a little bit into something that relates to all of us. I see some young people in the crowd. I see some old people in the crowd. And in the past, we've always been told, when you get older, you should buy more fixed income, buy more bonds. And they advocate a 60-40, 60% equities, 40% bond and fixed income. And, there are proponents, they say, today you can't do that. I mean, in low interest rate environment, you can't do that. But now with the return of high interest rates, do you think a 60-40 split is still the way to go for people who are getting older and want to protect their wealth? I mean, maybe Paul first.
Yeah, that's a tough question. But generally, from my perspective is that I would talk to clients or whoever wants to invest, I think to prioritize mental health rather than wealth. Because no matter how much money you have, if you can't live longer, you can't spend the money, and you don't enjoy your life, that is quite meaningless, I think. So, I mean, there's a 40-60, 30-40, but ultimately, it should be a number that match your risk profile and match a profile that allows you to sleep very well at night. And that's only just start, right? That's just a start, like how much allocation. Another thing is that how you want to manage it, strategies, everything. So all these things should actually allows you to sleep very well, not to be too worried, because you need to spend your quality time with your family, your friends, right? So I do have a chart. Just now the first slide. Yeah, this one. Yeah. So I'm from FSM1. So we do have our managed portfolios. So this is this is not the only solution for you guys, but it's one of the many solutions outside, right? So managing stress, like during market downturn. So you want to be invested in something that is not down too much and it's not giving you too much rate. So just a bit of promotion, right? So those are two of our strategy, balance and aggressive strategy. So during the market downturn in 2018, 2020 and 2021, our portfolio actually down lesser than most of the markets. You can see Hang Seng was down 43, Global Financials down 42, Hang Seng Tech down 68%. So if you still want to invest, you want to make some money, but also right through a downturn that is more manageable, this is something that you can consider. You can talk to our colleagues, my colleagues there, which is right behind you, FSM1 booths. So that's it for me.
Okay, enough promotion. Okay, Jin Yong, your thought process about the 60-40. Because for those of you who didn't hear Jin Yong's introduction, he's a fixed income guy. He's not so much an equities guy in the past. So hopefully he will fight for his 40% equity.
Sorry to disappoint you, I won't. Okay, I think the 60-40 came about also because in the past, it used to be conventional wisdom that when equities go up, the fixed income side doesn't perform as well, and vice versa. Hence, the need to diversify, right? But what we have seen the past 10 years or so is that asset classes now kind of all move in tandem. The correlation have gone up. Now the market is either risk on or risk off, right? What do I mean by risk on or risk off? If risk on means, oh, everyone is gung-ho, everyone is really saying that optimistic about the market, equities go up, bonds go up, right? And then when bad news happens, everything gets slammed down, right? So now I'm not saying that the 60-40 doesn't work anymore. What I'm just trying to explain is that the markets are now, well, there's so many factors that can affect it, right? At the end of the day, just have to be familiar with what you put your money in and why. So why I ask that question is, equities, primarily you go in for the capital gains, for the growth. Fixed income? Well, the name itself already tells you something. Fixed income is for you to collect your coupons, your yields, your fixed returns, right? So that will actually drive how much you want to put into what, because are you focusing on capital gains? If you're probably a young investor, then I think that's where you want to overweight yourself. But if you're focusing on constant stream of income, then obviously the bond market is where it makes more sense.
Okay, we're going to shift a gear, and I'm going to get you guys to hopefully participate. How many of you would, if given a chance because of tax break, how many of you would want to buy an EV car today? Can I see a raise of hands? 1, 2, only 2 guys. The rest, you still want to buy petrol cars, is it? 3, what's stopping you guys from buying an electric car? Infrastructure. Okay, what else? After sales service. Okay, what about next? Battery life? Anyone concerned about battery life as well? So, a lot of companies around the world, especially fossil fuel companies, they're going to go for this thing called a net zero target, right? And most of them are pushing for a net zero of 2050 or earlier. This includes, either adoption of more electric vehicle, a lot of things lah, right? Now, what's your take on the short term and medium term to long term energy demand and our balancing of getting away from fossil fuel? So maybe Jin Yong, I want to start with you first on this.
Oil is not going away, number one. In fact, I just got a new car, it's an EV, not a Continental one, a China one. Pretty good.
BYD, is it?
BYD, yes. BYD. Okay, I'm not plugging for BYD here, no.
How you wish BYD can pay you for advertising space, right? Yeah?
I wish. So yeah, it's a fantastic car, but the oil is not going away, right? The thing is, with all this push to renewable energy, to clean energy, electricity consumption will go up. I mean, it has always been going up in line with economic growth, right? There is no way solar can actually replace all our energy needs, right? Oil will still be required. Okay, maybe oil, you say it's not clean, it pollutes the environment. Fine, what about natural gas, right? Natural gas is relatively a very clean source of energy. And I might even add one more to that. I don't think in Malaysia we still have actively looking into it, which is the black sheep of energy source, nuclear. Right? I know when we say nuclear, we always think of radioactivity and all that, but it's actually one of the cleanest sources of energy. And yes, this slide, who is building nuclear reactors around the world? Look at the top. Obviously, it's always China in the top these days. Why are they building so much nuclear reactors? Because they foresee the increasing consumption of electricity, and this is one of the best ways to meet that demand. So if you want to turn that into a potentially investing idea, look into that space, right? I know solar and all that is more sexy and all that, but then the valuation also not so attractive or not so compelling. This could be one area. The flip side of that is that I did mention oil is not going away. The big oil majors, Exxon, even Petronas, they are still spending billions in capex, in investing in new production capacity, right? Because I think for the foreseeable future, oil is here to stay. Now, I'm not saying that we shouldn't aim for clean energy. I think that's a very good aim, right? But we have to be realistic about what's possible, right? So yeah, that's my take on that.
Paul?
Just keep it short because I agree with whatever that Jin Yong said. So I think the more important is to manage the transition towards clean energy. So we can't ignore energy, fossil fuel altogether. And with this, it means that going forward, the energy market would be a key market to monitor, and it's going to be super volatile from my perspective. From whatever that is mentioned.
Yeah. Okay.
I think there's a Elon Musk said something.
Oh yeah. I did have that.
Yeah. So I guess everybody knows who is Elon Musk, right? So the front runner or the guys who push like EV to the extreme, right? In terms of implementation, and he's saying the same thing. He says that fossil fuel, he hates to say that, but he needs to say it's still very important. What is important is really managing the transition. So watch out for the energy market. So it's going to be very volatile, exciting. Yeah.
Great. Thank you so much for your thoughts on that. I have two last questions before we open to the floor. The first one is with regards to Malaysia being viewed as stuck in the middle income trap. Now, I think if you guys were here when Minister Rafizi actually spoke about, growing our value base, growing our economy, I think even with the bull run of the semiconductor space, we are still doing a lot of the labor-intensive low-end work for the semiconductor industry. Why do you agree with that statement in the sense that we are stuck in this middle income trap? And why do you agree or disagree, and what should we do about it actually? Maybe Paul, we start with you. Oh, you want Jin Yong to start first? Okay, go ahead.
Unfortunately, I have to agree, and it gets me worried because I have kids who, hopefully they'll stay in Malaysia, right, and have a decent job. So the whole middle income trap thing is about, the thing is, Malaysians' economy has been growing. It has been growing, no doubt, right? What we need to measure actually is not the total size of the economy, but how much is a share of that economy, how much is the share of the pie of the economy belongs to each individual, what we know as the per capita GDP for everyone here, and how well distributed that is, right? So the thing is, I'm going to use a very simple analogy. Let's say a factory that produces fan. So the company that sells the fan managed to double the production the following year. So they hire double the amount of workers. Guess what? The company makes more money, but the workers still earn the same amount because now they just need more workers to produce more fans. Right? So that's a very rough analogy of what Malaysia is going through. What we need to do is, hey, is there any part of that process can be automated so that the same person can now monitor and manufacture twice the amount of fans.
With the same count but more efficient.
Yes, more efficient. So it's increasing the productivity. Now, that's not something that can be achieved in the next 2, even 5 years. That will take a much longer time horizon, which is also why if you're looking at investments, it has to be a longer time horizon, right? You have to be able to weather the storms up and down. So yeah, unfortunately, I agree with that. We are stuck there because we are not being able to increase the amount of value that we add to whatever economic activity that we are having now.
Understood. Paul, anything to add?
Actually nothing, because I'm not a subject expert in this matter. I think the only thing that I can talk about is from investment perspective. Malaysia, the growth has been, everybody knows, but from an investment perspective, we try to look at things that would have better growth. So for Malaysia, is the small to mid-cap companies, which have a lot of innovation, new products and services, and actually some of them are more tied to the global economy, which would benefit from China semicons or US development. So this is the area that I focus. And also previously I was working for a private equity firm. So basically the startup scene in Malaysia is is probably at the early stage. So we don't have too much of tech entrepreneurs, those kind of things. So we do need this area because this segment has been is where the growth is for the past 10, 20 years in US. So you can see US top riches, basically you can see a lot of tech entrepreneurs, which is very different from Malaysia. So one good thing is, I think recently there are a lot of policies over the past 2-3 years been supporting startups. So that is something, that's an area that will be very attractive, because if we have good startups, that means they would come to the main market for investors like us to buy into. So we want good companies, we want attractive companies, right? So it's very important that we keep pushing the startup ecosystem. Yeah.
Especially MITI's Pioneer 5+5, Pioneer Tech status. I think that should be more of that rather than that. Yeah. Okay, thanks.
I want to add to that, because you mentioned about startups and then they grow and they come to the main market, right? In fact, there are a lot of opportunities even for individual investors to even enter at the early stage. I'm sure many of you have heard of the platforms like the ECFs, the equity crowdfunding. So now all of us can be venture capitalists, all of us can be angel investors. But of course, the risk is much, much, much higher. Yeah. But then the barrier to entry is, the minimum amount is low enough. I think it's worth taking some risk in that space. Just to add to that.
Yeah, thanks for that.
Sure, I just need to sum up my whatever I said. So ultimately, I think as a country, we need product and services which the world wants it. More and more people wants to consume it. So that's where you probably would increase productivity, increase income levels for the whole country. So that is, one of my boss once said to us that the fight is not within the company, the fight is outside of the company. So I guess the same applies. The fight is not within the country, the fight is outside of the country. How are we able to extract more from the world, not from within ourselves?
Which is a good segue to the final question I have for both of you. Since it's so gloomy, the market is red, what is your view on the global outlook in terms of industries around the world? Is there any bright spots? Is there any dark spots? I'm very sure the audience have heard both your thought processes about the energy industry. It's not going to go away. But what other bright spots do you see? What other industries do you see that may have a medium-term future within 2 to 3 years, something to watch out for? Maybe we start with you, Paul.
I basically have 2 charts. One chart is from NVIDIA. So I guess the previous speaker has talked about this before. So I'm not going to drill too much into it, but semicons is basically the big thing for the next at least 5-10 years. So I'm not talking about next 1, 2, 3, or 4 years, because there's still a lot of things need to work on, right? But basically the growth is there, the opportunity is there, and this is actually the thing now. So 10 years ago, 20 years ago, the thing was Amazon, your platform, your Shopee, those kind of platform, where you shop. But now it's more about computing. So this is big and super big. It's about what price you enter into the stocks or market, right? But of course, you know that the prices has ran a lot over the past couple of months.
$1 trillion company already.
Yeah. So this is the bright spot for the next 10 years. I think you ask anyone, they will say the same thing. It's about what price you enter. So this is one. And I think the other thing is the dark spot, right? The dark spot, previous speaker also spoke about it, which is the financial sector. So, but one thing that I want to be more specific is that not all the financial companies are in trouble. I think Malaysia is pretty okay, and a lot of other countries are okay, but only specific countries are having problems. Usually are countries which have experienced very volatile property prices, and they have some balance sheet issues. Only specific countries. So need to be aware, not every financial companies, not every countries are having problems.
Yeah. Jin Yong?
Sorry, this is the last slide.
Oh, go ahead. One more.
On the market, the Dow Jones over the past 100 years. I think the first one.
Is it this one?
No. No. This one. Yeah, so I talk about sectors, right? Financial sectors and also semicons. I think lastly, I want to talk about the market as well, because economy and markets are 2 different things. So in terms of markets, you can see that this is the second oldest index in the world. This is the price performance. It's very important to stay invested. Why? Because you can, one very good point is that green means positive performance for that year. This is over 100 years of performance, and each individual years. So from the start, 1897 up until last year. So more green than red. And also, every time after red, you can see green. So, which means that, in short, you should stay invested, whether short, mid, or long term, right? Of course, there's different strategy, right? So, if you really don't know anything about the market, you just do like monthly kind of top up everything, right? So, especially you should invest more when it's red, when it's very bad, right? So, I think that's it for me.
Okay, Jin Yong, anything to add? Oh, yeah, definitely.
Anyone here knows what does MAD stands for? If you know, we are in the same age group. That's why boomers and Gen X, right? So of course, this is hopefully...
Maybe you want to reiterate, because I'm pretty sure some of them didn't hear.
MAD, it means mutually assured destruction. For those of you who are in my age group, you will know that there's this thing called a Cold War in the past, in the 80s, between US and Russia. Soviet Union, the predecessor of Russia. So they have nuclear warheads pointing at each other, and anytime the war can end. But it didn't, because each side know that if I fire, you die, I also die. That's why it's called mutually assured destruction. Hence, it didn't happen. So that's the old-fashioned one. The new-fashioned one is now, looks like this for our generation. Now, this is a bit small, but you probably can see the biggest blue circle is Apple. I'm sure we all know what Apple is. And it's all connected to all the different suppliers, vendors. Now, what is this reflecting? I know the text is too small. We all know that US and China now is kind of having some problems with each other.
Cats and dogs.
Yeah.
They need to find love.
Yes, love-hate. It's a love-hate relationship.
It's a love-hate relationship.
Now, will they go to war? I hope not. I don't think so. Simply because we now have the current version of MAD, right? So, Apple, although you see the phone at the back says designed in California, but virtually everything is made in China, right? So, one needs the other. Now, coming back to your question, bright spots or dark spots. I think I want to come back to Malaysia. I'm sure you might have read in the news, our Prime Minister wants EPF to bring more money back here, right? So that should be positive for us. Now, and I think you have seen all the messaging from the government that they want the wealth to be distributed more equally. So I'm just going to throw out one name. Now, this is not an investment recommendation, right, again, but I'm just thinking, hey, if everyone's wealth and income has improved, who could be beneficiaries, right? So I was just reading some news and I say, hey, you all talk about EV, electric vehicle, fine, those are very sexy. What about for the mass market, people like Perodua, right? Now, once people can afford it, they can upgrade from a motorcycle to a car, guess which one will be the next purchase? It's not going to be the Proton's latest model, right? No doubt they have a good strategy, right? It will be the Perodua sort of world, right? So I'm not saying that you should buy that stock, but this is something to keep in mind, right? When money comes back, how is it going to be distributed? Yeah.
Tan Chong and the rest will be very sad when you say that, you know. No, I'm just kidding.
Comments.
I'm just kidding. Okay. We've got only 5 minutes, so I can probably take only 2 questions from the floor. Thank you so much for the participation from the audience. I think one will be, if you can answer this, maybe you can be governor of Bank Negara already. The question from Anonymous is asking, what do you think will be the terminal rate for OPR? Or overnight policy rate for those of you who are, who are not aware of it. What's the interest rate that the central bank will actually set? Anyone wants to take a guess?
Probably just, does it matter?
Does it matter? Okay.
Because we are at the tail end. The bulk of the hike already done since last year. So you have already done so much. And now we are talking about this. So it doesn't matter like 5 basis point, 25 or whatever OPR. Unless I'm not true.
You can always defer to Bank Negara. It's okay. You don't.
Because Bank Negara Malaysia is too small in the global market. What you should ask is actually what is the US Fed terminal rate, because that would affect the whole world. So the US Fed already said that the tone has been that we are at the tail end. So, but like I mentioned earlier on, this is what I think for the next couple of months. but things might change. Depends on what happens. Because, you know, it's like Monday, there might be some incident that cause inflation, a new leading indicators come in that might let investor think that inflation is going to spike up. So things might change. So that's the reason why you need a financial advisor.
Okay, great. Rather than trying to attempt that, maybe we go on to the next question. There's a few. There's some company-specific ones which I don't think it's appropriate for us to answer about rights issues. Okay, but I think this one is pretty general. Why FBM's KLCI is weak now despite SPX, Nasdaq, and everyone else in the foreign markets? Yeah, is good.
Okay, I just bring a quick one. So
Yeah.
I think all the uncertainty in the market is actually being priced into the performance that you see now. I mean, in a nutshell, right? Because there's so much macro events happening outside Malaysia, right? That definitely has an impact to our local market. I mean, just to sum that up.
Yeah. Okay. Thank you so much for your participation. Hope you guys picked up something on the insights, and looking forward to having you guys here again next year. Yeah. Sorry. Oh, time's up. I'm actually being stopped by the organizers. Right? We can have a side chat later.
All right.
Sorry.
We'll be at the FSM1 booth.
Okay.
All right, due to time constraint, thank you so much to our moderators and speakers. Thank you so much. And you may visit FSM1 booth right here, and also CFS Society Malaysia at that site. All right.